a phenomenon that we've been less worried about. Our thinking has been that the economy, that the market usually leads the economy, and that means that whenever the data is bottoming, whenever the data hits extreme lows, you are naturally and usually going to get a larger optical disconnect between what's happening in markets and what's happening on the ground. And so, I think what you've seen, even though it feels very unusual in terms of how far and how fast things have bounced back, is actually more usual in terms of the relative patterns. And so it's not something that is, we think, a major concern at this point. I think that the biggest concern, the biggest issue for markets is maintaining that momentum. I think markets can be very forgiving of either a U-shaped or a V-shaped recovery. The markets care more about the trend in data than the level, but it is important for economies to keep showing that progress and improvement, and obviously the incredible level of stimulus also helps.
Wall Street has shown no concern around the protests that have swept the United States. What we know that investors are concerned about, though, remains to be the trade issue. And when there's been any negative news flow that's crossing potentially around US and China, that has caused just a little bit of concern for some investors that lived through the trade war. Just give us a sense of what we may be looking at, because there are fears that Trump may do what Trump did in 2016, talking tough on trade, and that could take the US-China relationship sour, but also other partners around this digital tax.
Yeah, I do think trade is an important thing for investors to focus on, and as we head into the heart of the U.S. election, and especially because I think both the main party's candidates, both Joe Biden and Donald Trump, I think are both, we think, going to strike a relatively tough position towards trade with China. It's a relatively bipartisan issue. You see that as well in the way that the U.S. Congress has voted on many of these measures. So at the moment, we think that the administration is going to focus more on rhetoric rather than actual action. That because the U.S. economy is still weak, because you're still some distance from the election, actually kind of taking those harder measures could be delayed. But I do think this is something where, even though we remain constructive now, it's, I think, a very important thing that we need to keep in mind as we move into August and September, as you get closer to that election, as the temptation might rise to say, well, look, either if one is behind in the polls, or if one feels that the negative consequences of escalating a trade war would land after an election, while the positive benefits to polling numbers or whatnot would land before, I think all of that means that an escalation in trade tensions around August, September is a real risk, and something we're certainly keeping in mind.